5 of the best ETFs to buy and hold forever. Now, typically our first choice for number 1 would be QQQ, the Invesco QQQ Trust ETF. However, what we always need to look out for is this expense ratio, 0.2%. This is the amount you do have to pay to management for essentially managing your funds in this ETF. So what we like to look for is as low as possible. So our first buy and hold forever ETF is QQM. It is essentially a very similar ETF. However, as opposed to paying 0.2% on the expense ratio, as we can see here, we are paying 0.15%. Now, it does have a yield, although very small, of 0.66%, and we can in fact see that over the last year it is up 37.3%. When we take a look at the holdings, we can see the majority of this is in fact the technological sector, nearly taking up half of this breakdown, and then we can see in second place the communications at just under 16%. So in terms of the top 10 holdings for this ETF, the first one there is Microsoft, 8.61%. Then we have Apple, 7.78%, and then Nvidia coming in at just over 6%. So a lot of growth in the technological aspect of this ETF. On top of that, when we do take a look at the performance over the last year and we want to look at comparable ETFs, we have the likes of ProShares, Nasdaq, Triple QA, we have Innovator Growth 100, but as you can see, in terms of the expense ratio, this is in fact the lowest, 0.15%. Now, in terms of total return, over the last year, we can in fact see the best performing up 38.32%. Bear in mind, total return includes reinvesting those dividends, and over the last 3 years, we can in fact see again the best performing up 32.37%. So not just very strong, but also the lowest expense ratio in comparison to others, as well as in comparison to just QQQ. The second ETF that we see as a buy and hold is essentially one focus on the semiconductor industry, and the reason why we have chosen SOXQ is again for that reason. In terms of the lower expense ratio, it does have one of the lowest in the semiconductor space, lower than the typical SOX as well as SMH. Now, we can also see a yield around 0.75% and a very strong performance just over the last year, up in fact around 60%. When we take a look at their holdings, none other than Nvidia does take that first place, 13.32%. We have Broadcom around 9.75% and Advanced Micro Devices at 6.21%. So this is definitely one to consider if you are looking at adding a semiconductor ETF into your own portfolio. In terms of performance, and again taking a look at others, we can see this 0.19% is again the lowest expense ratio, and as a reminder, you do want the lowest amount as it can take a large chunk of your performance over the longer term, so that is already off to a very strong start. Again, when we look at the performance over the last year, the best performing up 61.1%, and when we expanded over the last 3 years, again 51.79%, a lot better than the others. So therefore, this does take our second ETF to buy and hold for the longer term. Now, typically in third place, we would have VO, which is a very popular ETF. However, this is exactly the same, tracking the S&P 500. But again, the reason why we select this over the Vanguard equivalent is that very low expense ratio at 0.02%. And you will see shortly the comparative figure. Yield while trading 12 months, 1.37%, and a very strong performance just over the last 12 months, up 25%. When we take a look, again, bearing in mind this is just the composition of the S&P 500, 30% in the technological sector, 12.64% in the financials, and healthcare coming in third at 12.27%. In terms of their top 10 holdings, well, as we can see here, the first place is Microsoft, just under 7%. We then have Apple at just under 6%, and we can see in third place, the third largest holding, Nvidia Corporation, at 4.95%. Now, when we take a look at others, again, we can in fact see we have included VU, Vanguard, S&P 500, although marginal, 0.03%, it is still higher than the expense ratio of SPLG at 0.02%. And in fact, we note it is the lowest expense ratio from the others that we can see that are also very popular in this space. So let's take a look over the last 10 years. Well, we can in fact see, we did just do this to point out that it does essentially track a very similar performance to VOO, 226.61 versus 226.55. And again, one of the better options in this market if you do just want to track the S&P 500 with that low expense ratio. Over the last year, again, we can see up there in the best performers. Over the last 5 years, again, very similar to VOO, and over the last 10 years, as we just saw here, very strong. So that is our third contender there for a strong buy and hold forever ETF. We then move on to a very popular choice. It is the Schwab US Dividend Equity ETF. Now, a few things that we like about this. The first one is that expense ratio. Again, very important, 0.06%. Yield trailing 12 months, well, a very large yield, 3.43%. And also, they increase the dividend year on year at a very high rate, double digits. And over the last year, we can see it is up 10.63%. Now, in terms of their holdings, well, financials does make up the largest portion at 17.21. Second place, we have healthcare. And then coming in third, we have consumer defensive at just under 15%. In terms of their top 10 holdings, well, we have Texas Instruments at 4.29, Lockheed Martin at 4.26, and Chevron Corporation at 4.2. As you will have noticed, in comparison to other ETFs, they are fairly equally weighted, as we can see the top 10 pretty much around that 4% level, and a lot of these do increase their dividend at a very, very fast rate. Now, when we compare these to others, again, before we look at the performance on a total return basis, we have some very popular options that I'm sure you would have heard of, but do notice 0.06% is one of the lowest expense ratios when you do compare it to others. And as we can see here, there's SDY, DVY, very high, 0.38%, 0.35%, but others, even DGRO, which is also a very popular one, slightly higher at 0.08%. So how does the performance compare? Well, over the last year, now this includes reinvesting those dividends, SCHD in the middle of those competitors. When we expand it over the last 3 years, we do note again a very similar performance in the mid region. Over the last 5 years, it is essentially the best. So when you do zoom out, the performance does look a lot better. And over the last 10 years, as we can see, right there up there against DGRO. Now, DGRO has marginally performed better, but when you do incorporate that expense ratio, as we just saw above, 0.08, I personally would rather pick SCHD with a smaller expense ratio, even if the total return is marginally smaller, as this will impact it over the longer term. We then move on to essentially the final one that we would select and include into our 5 buy and hold forever ETFs is the Vanguard Total World Stock Index if you just want to buy the whole thing. Now, this is more exposure to not just America, the USA, but also to other regions. Ticker symbol VT, and we can see here it does also pay a yield trading 12 months just over 2% and an expense ratio of 0.07%. Now, performance over the last 12 months, it is up 18%. And when we do take a look at their holdings, again, technological space, 23.47%. Financials just over 15%, and the industrials just over 11%. A bit more detail, a bit more light to their top 10 holdings. Again, we can see Microsoft, although marginal, own only 3.82%. Apple in second place at 3.05%, and Nvidia at around 2.62%. Now, you may be thinking if you already hold QQM or just QQQ, maybe this isn't one that you want to include. But again, it is just something that when we do take a look in terms of the regions, if you do want that exposure to the emerging markets, 9.4%, Europe at 15.2%, and we can see also the Pacific at just over 10%. Again, different investors will want different things from their portfolio, but we thought we would include this just so you can have that alternative. We then take a look at their performance as well as the comparative data in terms of the expense ratio. 0.07%, again the lowest or one of the lowest. In comparison, we do see USPX, although a lot lower at 0.03%. We can compare the performance. Now, when we take a look over the last year, now total return, again including dividends reinvested, 21%, not too far off the others. Expanded over the last 5 years, 59.7%, again, very similar, but what I would say is always remember, even if the performance is slightly lower, and we're talking 10 to 15 percentage points, you can also see that, for example, USPX looks pretty good, 0.03%. When we expanded over the last 10 years, we do see that VT has outperformed all of them. However, in essentially the first place, we have DGT. Let's take a very quick look, but we do note that DGT does have a higher expense ratio at 0.5%. So those are the 5 buy and hold forever ETFs that we would recommend for any portfolio. And just as a reminder, the top 5 that we would select would be QQM, the Invesco Nasdaq 100 ETF. We then have exposure to semiconductors, SOXQ. We then also have exposure to the S&P 500, SPLG, remember the lower expense ratio. We then have that dividend growth in our portfolio, the SCHD, a very popular one in the community. And then, as you can see, we would end on that VT Vanguard Total World Stock Index for those that do want exposure, not just to the USA. Also, just to let you know, we do release free weekly articles with a lot of information. If you do want to gain access, all completely free, do click on the pinned comment below and you can start reading these articles. As always, if you enjoyed today's episode, value was provided, smash that like button, hit that subscribe and bell button, and as always, we'll see you all on the next one.